Hello, investors and traders, and welcome to the weekly market report. I'm AJ Monte, and this is a one-year daily candle chart of the IWM, which is the Russell 2000 ETF. If you're new to this report, then know that I keep my lines on the chart from last week's report so you can see how the target numbers worked out. And last week, my forecast was that we would rally early in the week to test this moving average. We did not do that at all. In fact, it just broke out right below the support level and then went on to hit my long-term target. Now, I'm reiterating what I said last week, where this target of 201.32, I was expecting that to hit towards the end of February and into March. And in 1 week, we went right down to that level. Now, what does that mean for the longer term? Well, I'm going to erase these lines now. My long-term target was hit, and then I'm going to go ahead and look at the weekly chart because there's a lot of data there that you need to look at, especially for the small cap market. Now, this is a market right now. It looks like it's in free fall. However, there is a slight support level right here down around the 195 area. And so now that I go back to the daily chart, I'm going to show you that that support level is a place where I think we're going to wind up on Monday, maybe Tuesday. I think the momentum is going to continue a little bit lower down here, and then I think we could bounce. I'm not looking for a furious bounce. I'm looking for a bounce right up to around the 205 area towards the end of the week. Now, this is also contingent upon a lower volume day or two after the initial bounce here. In other words, we need to see a drop in volume before that pivot point will most likely form. Now, if you take a look down here at the stochastics, look at that reading. We have the lowest reading of the year. It's the most oversold for the last 12 months. And we have a slight hinge. Let me zoom in there so you could see that. A hinge is when we have a little bit of a pivot point on the percent K, which is the blue line there, and that's happening. Now, the CCI down here is still oversold, but we actually have a positive divergence from this low to this low. So in other words, we have higher lows while the price was going lower. Now, I'm not getting crazy bullish, of course, but I do expect to see at least a little bit of a bounce. We'll have to see what the Fed has to say next week as well. Now, if I go to the VIX, I want to hop right to the VIX because that leads into the S&P. This was an amazing forecast and just another testament to how well the charts really work. And I had a short-term target that we would bounce off the moving average, but my longer-term target was something that I left in place from back here at the end of December. And I said that we would most likely move up with the end of that line being my target at 25.71. We hit that yesterday. We went a little bit higher, and now that all of the targets are hit, let's erase those and analyze what we could see. Now remember, I think the general markets are going to go down just a little bit more on some of this momentum selling, maybe even some margin selling, which could lead us to a slightly higher VIX towards the beginning of next week. Then I think we're going to pull back to this area right here. So again, upside target on the VIX of $30.97 to end the week possibly around 26.88. And again, look down below as I magnify this. That is a hinge on the stochastics, and we have the CCI still going higher. But it's the hinge on the stochastics that I really like. The CCI being a more short-term and more sensitive indicator leads me into this early forecast for Monday and Tuesday with the VIX being higher. Now, the S&P did not bounce, with the SPY here, the S&P did not bounce off of this key support level. It didn't even try to bounce off of this gap fill support. It went right down all the way here to this gap area down there. Let me erase these. Now, I do believe that we will also see a slight rally in the S&P, but only after we drop just a tad in the S&P 500. Once that gap completely fills, I think we'll see that. There's the gap fill target that is most likely going to act as a support level. See that? I just highlighted that gap right there. 80% of the time gaps fill. And then after they fill, there's an 80% chance that prices will reverse, and that's the forecast for the S&P. The diamonds, very, very interesting forecast here. As you can see, it completed my ABCD forecast, where again, to repeat last week, from A to B, we had a down leg, that's to B. From B to C, they had that short up leg. And then from C all the way down to what I believe is going to be D. Now, D does not actually form until we get a pivot point. Then D changes to A, and we go through that same ABCD pattern on the way up. We'll go A to B, B to C, C to D, sell it, boom. So again, I think the markets are under extreme pressure. I don't believe we're going back and seeing the highs anytime soon. The major markets are dropping below all the major moving averages, and we have convergences of these moving averages crossing to the downside. It's just amazing how much downside pressure, but you can't say that we didn't warn you on this, right? I mean, we have been talking about the 210 level on the IWM for many months, and now the strategy that we're teaching to our trading clients is to, instead of buying the dips, we're looking to sell into the rallies, take bearish positions into the rallies. Now, as I draw this out, I'm going to go horizontal with this here. This is a key support level for the diamonds. That's on the weekly chart. If I go back to the daily chart, you'll see where that is. I still think we're going to go just a little bit lower on the diamonds and then bounce, because we have another support level right here. In fact, I don't even want to get that aggressive. Let me erase that. I think we're going to bounce, but not that high. There we go. I think we're going to go right up to that level. Upside target of 348.70, and that is for the diamonds. Now, finally, the Qs. The Qs took an absolute beating this week. And again, my forecast on this one was that we would initially rally. We did not do that. Didn't even come close. It came right down to this support level, and we still see the volume increasing. So what I think we're going to see next week is actually a violation, a breakout below that support level, and then we'll start to see the volume drop. And again, just like the rest of the markets, I think we'll see a bounce. Look down below as I magnify that. Right there, that is a slight hinge. So my forecast, again, to the upside is going to be 358.67 by the end of the week. And then we'll have to see if this support level actually holds. Now, I'm winding up with the Qs because I want to draw your attention to my Twitter page, to the tweet that was pinned to the front page right here. I keep it pinned so you can go back and look at it on a daily basis. Let me just align that for you. Check out what happened today in the New York Stock Exchange right here. We had 8 52-week highs, new 52-week highs, only 8. Now look down below. This is pretty incredible. We had 525 new 52-week lows. I don't recall the last time that's happened, but it does not happen often, and it happens in an extremely rare while. Now looking at the Nasdaq, take a look at this. We had 23 new 52-week highs, but try not to fall off your chair when I show you this one. We had 1,322 new 52-week lows. Now, this market is going to continue to stay under pressure until we start to see some type of equilibrium or balance between the highs and the lows. This is basically measuring the market breadth, not including volume. It's slightly different. Look at market breadth when you include volume. But this is something I'm going to keep on my Twitter page, so you can go back and look at that and check in periodically. This report, by the way, put out by the WallStreetJournal.com, is something that changes dynamically throughout the day. So it's a good little tool to keep handy when you're trading, especially for the option traders. So that is it for this week. Thank you so much for following. Please like, share, and subscribe. If you subscribe, then you can click on the notification button and you'll be alerted when the alert is posted to the YouTube channel. So again, have a great weekend. We'll talk to you next week. So long.